Hi everyone and welcome back. On this channel, we've spoken a lot about different market trends, but today we're going to do something a bit different. We're going to try to tie these trends together to give you a bigger picture view of this industry. We're going to discuss 4 trends to watch out for in real estate in the 2020s. We're going to talk about the growth of affordable housing, the growth of rental markets in India, the creation of new cities and urbanization, and finally, the increasing prevalence of financial products based on real estate. Let's talk about the growth of affordable housing in India. In last week's video, we covered government measures in the 2021 budget specifically for affordable housing. This is a growing segment and was incredibly active in the last year, both in terms of demand and supply. According to a PropTiger report, affordable houses, which are currently defined as being priced under 45 lakh rupees, made up 51% of the total housing supply in 2019 and 46% of the supply in 2020. On the demand side, a recent survey conducted by Anarock showed that over 40% of respondents were looking for a home in this price range. With the government pursuing their Housing for All mission, this is a sector that is bound to get attention in the upcoming years. Reports suggest that for this sector to thrive, affordable housing finance has to grow as well. This would work well with government measures such as the extended deduction available on interest payments for loans for affordable housing. We are starting to see growth in this sector with reports suggesting that the affordable housing finance sector has a good long-term growth outlook with a growth of 12 to 15% expected in the next financial year. Now let's talk about the growth in rental markets. Compared to other countries, India has a smaller proportion of their population living in rented housing. As of the 2011 census, 11% of India's population lived in rental accommodation as compared to 56% in Switzerland and 36% in the US. Further, as of the National Sample Survey in 2012, 71% of people did not have a formal rental agreement. Just as RERA changed the landscape for the sale segment of residential housing, the Model Tenancy Act expected to come out in 2021 could be a game changer for the Indian residential rental market. Policy changes like this would make the obligations of renters and landlords clear while also improving the process for dispute resolution. There has also been an increase in flexible or plug-and-play rental models both in commercial and residential real estate. On the commercial side, we are seeing co-working spaces making a comeback towards the end of 2020 and at the start of this year. A recent report by JLL suggests that despite the disruptions to this sector in 2020, demand from large enterprises will propel the co-working segment to over 50 million square feet in 2023. Further, they go on to state that the flexible spaces segment could be expected to grow at an average of 15% over the next 3 to 4 years. The same flexibility and plug-and-play style of operations is also being offered in the residential space by co-living companies, which we spoke about in an earlier video. Given the current state of the market and the policy changes to come, we could see rental housing growing in the 2020s. Now let's talk about the creation of new cities and the increasing urbanization happening in India. According to the Ministry of Housing and Urban Affairs, the Finance Commission has recently approved an 8,000 crore rupee grant for the incubation of 8 new cities. Further, an official goes on to state that the way the country is growing, unless we have planned cities, we will be relying on the outgrowth of existing cities which may become inefficient. Further, the Oxford Economics Global Cities report suggests that 17 out of the 20 fastest growing cities in the world between 2019 and 2035 are from India. Further, allocations from the central government for intra-city infrastructure in the form of buses and metros could also accelerate the growth of smaller cities and towns. Finally, let's talk about the increasing amount of financial products based on real estate. I know that we have discussed REITs multiple times on this channel, but today I want to talk about the underlying themes related to the introduction of these products. For example, in India, we have also seen the introduction of InvITs or infrastructure investment trusts. InvITs are similar to REITs but hold a portfolio of infrastructure assets or projects. The income from these assets, such as the toll collections from a highway or the rent from an income earning property are then distributed to investors. The effort with both REITs and InvITs is to make high yield financial products out of income earning real estate assets. Given the impact of COVID-19 on the economy, interest rates are currently very low in Western economies, leading foreign investors to look for high yield options elsewhere. This can be seen through the continued private equity investments into the commercial real estate sector in India, which looks set to continue. Not just international investors, but domestic investors and funds are also looking to get involved with REITs and InvITs, as seen by the exposure taken by mutual funds to these products. SEBI has also allowed the launching of schemes that will hold predominantly Indian REITs and InvITs, which could lead to real estate focused funds in the future. On the supply side, developers are also opening up to the concept of build, lease, and REIT. Developers can now build commercial assets, lease them out to blue chip tenants, and then look to make them a part of a REIT portfolio. This would allow developers to raise capital and also lower their levels of debt. Compared to more developed economies, we are just seeing the tip of the iceberg in India when it comes to the size of REIT and InvIT markets. For example, in the US, REITs of all types collectively own over $3.5 trillion in gross assets across the US. In these countries, as markets have matured, you can see REITs specializing in certain market segments. In the US market, for example, there are warehousing REITs, hospitality REITs, data center REITs, which we spoke about in the past, and even cannabis REITs, which has actually performed quite well in the last year. Basically, these products will look to find value in existing operational and income earning assets, to find new ways of financing for developers and new ways of earning for investors. Alright everyone, I hope you enjoyed this video, and if you'd like me to cover any topic in particular, please do let me know in the comments below. As always, please remember to like the video and subscribe to the channel if you enjoyed the content. Thank you.